Welcome to The Explainer. Today, we're cracking open the playbook of a physicist who took a totally different look at the wild world of the financial markets. So forget about trying to predict the future. We're about to dive into a whole new way of thinking. One that's built on a solid process, not just dumb luck.
Okay, let's kick things off with this kind of challenging idea from Dr. Varma. He's a particle physicist who became an 8-figure trader. And this one idea, it's the key to his entire philosophy. Seriously, if you can get your head around this, you're already most of the way there.
So how do you actually do that? Well, Varma's answer might surprise you. He says winning isn't about chasing the highs. It's about getting completely obsessed with your losses. The real goal is to figure out, hey, was that just bad luck, a random roll of the dice, or was my actual strategy broken? Answering that question, that's where the magic happens. So, how in the world do you build a good process? Varma's first rule is kind of radical. It doesn't start with the market, it starts with you. You've got to forget this idea that there's one best strategy out there for everyone. Nope. The only strategy that's going to work for you is one that fits how you're wired. Your edge is knowing yourself.
And you don't need a degree in psychology to figure out your trading personality. In fact, Varma says you can get a pretty good idea just by asking yourself 2 really simple, but, really powerful questions. First one up. Can you actually sleep at night when you have a trade open? Your gut reaction to this tells you almost everything about your tolerance for risk. I mean, if that thought alone gives you anxiety, you're probably a day trader at heart. But if you're cool with it, you might be a swing trader, holding things for a few days, maybe even a few weeks.
All right, and for the second part of the puzzle, how do you handle a losing streak? I mean, really, do you freak out? Can you take being wrong again and again and again? If you can take a bunch of small hits knowing there's a huge win coming, you might be a trend follower. But if you'd rather get lots of small wins, even if it means risking a rare but huge loss, well then a counter-trend strategy might be your jam.
Okay, now here's where it all clicks together. When you combine your answers, you get this kind of roadmap to the perfect style for you. Can't sleep with an open position, but you're okay with losses? You might be a trend-following day trader. Can't sleep and you hate losing? You could be a scalper, someone who makes a ton of tiny trades all day. See? This is how you build a strategy that works with your brain, not against it. All right, so once you've figured yourself out, it's time to completely change how you look at the market. After trading for decades, Varma is absolutely certain about this one thing. You have got to stop trying to predict the future. It's just a waste of time. He learned that trying to predict exactly where the price will go is like building a house of cards. It's just so fragile. It is way, way better to be approximately right than to be exactly wrong. So instead of asking, where's the price going to be, ask a much better question. What's the risk level right now? That's a reactive approach. It's like being a sturdy ship that can handle the waves, instead of a flimsy hut that's just waiting for a storm. And you don't need some quantum computer to do this. Actually, a really simple indicator that everybody uses can give you a surprisingly clear picture of what the market's risk environment looks like. Let's just take the 200-day moving average. It's a classic. Historically, when the S&P 500 is trading above this line, you get about 2/3 of the total returns with only 1/3 of the risk. But when it's below that line, the whole thing flips on its head. This one little tool tells you when to be aggressive and when to hit the brakes. And notice, we didn't have to make a single prediction. All right, let's pull back the curtain on a secret part of how the market really works. We're going to talk about something that scares the pants off most small traders, the so-called stop-loss hunt, and we're going to see how you can actually turn it into a massive advantage. So, the big institutions, the heavy hitters in the market, we call them whales. And when they want to make a huge trade without freaking everybody out, they use something called an iceberg order. And just like a real iceberg, you only ever see the tiny little tip of what's really hiding under the surface.
So you know that feeling when you have a trade on and suddenly the price just nosedives, hits your stop loss perfectly, and then reverses right back up? Well, Varma's insight here is a total game changer. It's not a conspiracy. They're not out to get you personally. It's just the mechanical result of a whale's algorithm, hunting for orders to fill its massive position, and it finds them right where all the retail traders put their stop losses. And here is the mind-blowing part. Instead of being the victim, you can become the predator, or in Varma's words, the leech. If you can learn to spot these mechanical hunts for liquidity, you can literally just hop on for the ride and surf the wave the whale creates. You're not fighting the big players anymore. You're using their momentum. Which brings us right back to where we started.
It all comes back to the single most critical lesson that separates the traders who make it from the ones who, don't. Verma tells this amazing story about what he calls his worst trade ever. And the punchline? He made a 10% profit on it. So, why was it his worst trade? Because out of pure greed, he broke every single one of his rules. He got lucky. His process was a total train wreck. And that story just hammers home the whole point. A good process that ends in a loss is, believe it or not, infinitely better than a bad process that gets lucky with a win. Why? Because that good process builds discipline, and that's what you need to survive long term. The bad process? It just reinforces bad habits that are eventually going to blow you up. So, I guess it all comes down to one question, a fundamental choice, really. Are you in this just for the thrill of being right on a single trade? Or are you playing the long game, building a boring, repeatable process that can actually stand up to the market's chaos? That, my friends, is the physicist's code.